Hey, soldiers, corporate America is in full panic mode. They know that tens of millions of Americans are about to take tens of billions of dollars in disposable income off the table. It's not going to be flowing into the coffers of these companies, and we're going to tell you why. Now, this has definite ramifications for the overall economy, and there's something in this that you can profit from. We're going to get to that near the end of this video, so definitely stay tuned. But what's going on out there? Well, corporate America is panicking because student loan chatter on the quarterly earnings calls, that chatter has hit a record. Now, the quarterly earnings calls, if you own shares in a company, guess what? You can get in on the quarterly earnings calls most of the time. All you got to do is take a look at the phone number that they publish. It's a publicly traded company. So if you own shares in the company, you can listen in. Even if you don't, you can listen in. You won't be able to participate. They mute everyone with the exception of certain executives and certain members of the press. But it is good for you to do that. If you're thinking about buying shares in a company, or if you own shares in a company, it's going to give you a broader understanding of not only how the company works, but it's going to give you a great comprehension of how the overall stock market works as well, and give you some insight into the economy. Corporate America is panicking this earnings season as the prospect of more than 40 million Americans carrying student debt will have to start making payments in October after a 3-year-long payment forbearance that had artificially boosted disposable incomes by tens of billions of dollars. And you know, this is America. We're not really known for saving money. So a lot of that money went into, increasing lifestyle, vacations, new cars, new clothes, improvements on the house, Using the document search function on Bloomberg, the phrase student loan in all second quarter earnings calls soared to a record high of 151 mentions. So what we see here is corporate America getting ready to excuse their lackluster earnings as we go forward in the year and into 2024, in part on the student loan forbearance ending. During earnings calls, companies in the financials, consumer discretionary, and consumer staple sectors had the most mentions. Now, the financials, we're talking about people who were, in fact, going in and putting money into brokerage accounts and increasing their ownership of assets. So you did have some of that. That's going to fall off here, predicted by these companies. But you also had consumer discretionary and consumer staples. Discretionary stuff like clothing, all right? Staples include food, all right? Different appliances and things that you might need. Maybe you got the high-end dishwasher. Maybe you didn't even need to replace it, but you had some money swirling around in your pocket, and you decided to go whole hog, all right? So these companies are saying that we may see some interruption in that. Consequently, these sectors are poised to face the greatest exposure when consumer spending decreases. In June, Barclays economist Adrian Yee wrote in a note to clients explaining the restart of student loan payments would be a $15.8 billion monthly headwind, or $190 billion per year to the U.S. economy, as the average student loan debt holder sees an incremental monthly payment of $390 beginning this fall. So you had that $15.8 billion that was out there boosting the economy. Now it's got to be repaid, so it's not going to be able to be devoted to anything other than those loan repayments optimally, right? And you definitely want to pay your student loans, because here's the deal. You can't write it off on a bankruptcy. You can't dispose of it via bankruptcy. Aren't they slick? Right. And you don't want to do that anyway, right? And this is why I always say, If you're going to college, college is an investment. If you want to be intellectually enlightened, then you need to go to Coursera.com and figure out, how to do that for free. The information is out there. But when it comes to plunking down tens, in some cases, hundreds of thousands of dollars to a college or university, you better make damn sure that you understand that's an investment. And you better be able to see some return on that investment by going out and using that degree to repay the loan and be able to finance a lifestyle after that. It's great. I know a lot of people who have the honorific doctor this, doctor that, not medical doctor, but they're a doctor. Whoop-de freaking do. All right. But they're paying back some really onerous student loans, and they're not making money commensurate with all of the money that they have to pay back. They're underwater as far as the investment. With the return of these payments for 40 million Americans, the threat of consumer spending sliding is high. Of course it is. Because wages aren't going to fill that gap. Wage increases aren't going to fill a gap of $15.8 billion per month. So this is all coming. Also, remember, there's $1.7 trillion worth of student debt in the country. Then on top of that, there's $1 trillion in consumer credit card debt in the country. So people are, as these interest rates have risen, people are really getting slammed. All right. Now, analytics company Earnest Insights wrote in a note that Frontier Airlines, Peloton, and Old Navy will be some of the hardest hit companies come October when these loan payments resume, because people won't be flying to vacation destinations. Peloton, it's a pretty expensive piece of exercise equipment, and you need some disposable income to purchase that discretionary item. And Old Navy, hey, maybe you'll change to Goodwill. I found some really nice classic vintage Brooks Brothers stuff at Goodwill. Just go to a Goodwill in a great neighborhood, okay? Where the rich people, they leave this world and then they take the person's stuff to Goodwill. And you can come away, as I did, with a $700 jacket for, I think I paid $39. Okay? So, sorry, Old Navy. Goodwill is not publicly traded. It is a for-profit institution, though. Student loan payers who suspended payments during COVID will have to resume those payments come October. That cohort of shoppers made up more than 10% of spending at several national brands in 2022. Their spending also outperformed non-borrowers at several brands, suggesting that their lack of payments may have buoyed their spending in recent years. That leaves dozens of national brands that benefited meaningfully from that pause in student loans and that may be more exposed to that shopper base as payments resume. In a moment, I'm going to tell you exactly how you can benefit from all of this. Before I do that, I did mention that America has over $1 trillion collectively in credit card debt. If you have $10,000 or more in credit card debt, visit mcenow.com/get debt free. We have partnered with Debt America, and we will hook you up with a qualified expert debt resolution specialist to help you develop a plan, implement that plan, and get that debt paid off. Okay, that's vital. Now, how can you benefit from this? Well, look, if these companies are going to be seeing some headwinds, that might mean there's an opportunity for you to take a look at certain companies that will be exposed to, less revenue because of the student loan crisis. Again, we went over discretionary financials and consumer staples. Take a look there. See, there may be some opportunities as those stocks slide for you to get in low. That's the whole idea, right? Buy low, sell high. So that's one way that you can profit, all right? There's always more than one way to skin a cat. Now, I do want you to take a look at another set of pressures that the economy is undergoing right now. The banking crisis seems to be metastasizing. We've got another rating agency that is saying, hey, we got to downgrade some of these banks. Check out this video. Know where you're at in the water. Guys, I'll talk to you soon.